Hello, everyone. Welcome to this new weekly webinar. And this time we are going to talk about Forex, okay? The real reason why Forex market moved. And it's obviously about supply and demand. That's the reason why Forex markets move, or any market, okay? Welcome, Michelle. So hopefully you can hear my voice. Everything is connected. So hopefully you can. So my name is Alfonso Moreno from Sonofogate Trading Community, and I've been trading supply and demand so many years that I have already forgotten. So this is the only methodology that I use, and I'm going to go over certain Forex pairs that right now are moving really well based on previous analysis that we have done. Okay, it's because we have done many live webinars on Forex, on intraday, on swing trading. We're going to be talking about the euro dollar, the dollar index, the euro yen, and many other pairs are playing out really well as expected, and because there is a very strong imbalance in control. That's it. Okay. Welcome, Mike. Yeah, good morning to you, sir, too. So without further ado, let's start with the euro dollar, which is the most tradable and liquid Forex cross pair in planet Earth. Okay. Unless Elon Musk decides to create a new country with its own coin. Probably, because this guy's crazy. Okay, good. This is the euro dollar. We have been talking about the euro dollar for quite a long time. We had a very strong imbalance here in the weekly time frame. Look at the strength of this move, okay? So we have very large candlestick body. So price action wise on this Forex pair was okay. After a very strong sell-off, we need to wait. So if you are trading intraday or you scalp Forex, and the news at that time were like negative, probably you were selling, expecting like the euro dollar was going to drop very far, okay, which is gonna happen. Okay, we have been talking about the euro dollar forecast and predictions for many months. Okay, you can check the videos, the YouTube channel. If you are a member of Sonofogate Online Trading Community, you can check that. We've been talking about that, and we're gonna start with this and then do the dollar index, a few yen cross pairs, and a few US dollar cross pairs, which are, because these Forex cross pairs are the best ones right now. So we're gonna focus on the best ones and why these are moving. Okay, so after such a strong rally, we want price to rally. Okay, no matter what. I mean, if you start trading the 5-minute and 50-minute charts right there, and obviously you are unaware of this imbalance on the weekly time frame at 170, 117, then you are going to incur into losses after losses. Okay, that's a fact. It's going to happen. Okay, so so once price reaches that area of supply, we have been talking about new supply levels, etc. And what happens in the smaller time frames? And the daily is a smaller time frame, we have new supply levels in control, and there is a new one being created here and there. As you can see, the daily lows have been broken. New supply levels will be created there probably soon. So on the 4-hour, we've got probably one being created over there. So the questions here, the question is very simple here. So why is the euro dollar dropping so strongly? We even have a new low on the euro versus the US dollar. So why this is happening? It's very simple. It's not only because the weekly supply level at 117 gained control like 2 or 3 months ago. If you go to the bigger time frames, and we've been talking about this one, okay? This is the quarterly time frame. And at that time frame, okay, we've got a very strong imbalance in control that took control in July 2025. And I have been doing analysis on this Forex major pair for many months, saying this is going to happen, this is going to happen, this is going to happen. This is a very long-term type of trade that institutional traders use to do all the exchanges and to manipulate the markets and everything. Okay, so they are getting a better price here. So we're expecting the euro dollar to keep on dropping very strongly. Okay, new 3-month lows have been printed. We already have, remember, we have the weekly supply level in control there, new weekly lows, another weekly low, another weekly low. And all this is happening because we have the 3 months in a downtrend and the strongest supply level in ages since that one that happened in 2014 took control. So this one was created during 2021, and it took 5 years for that level to take control. So I predicted, I forecasted this movement many years ago, and have been forecasting this movement many weeks ago, many months ago. It is very simple, but since most Forex traders are doing Forex intraday, Forex scalping, they have no idea why now the euro dollar is getting stronger. Maybe now you will hear in the news, oh, it's because there is a truce signed between Donald Trump, the US, and Iran. It's because of this, it's because of that. That's bullshit, my friend. That's the explanation you need, or people need, to try and make sense out of this. And it doesn't work like that. It's moving down because we have supply and control. As simple as that. So ignore all the news and fundamentals. Last week, I did an analysis, a webinar on earnings releases on stocks, and I showed you that they are useless, okay, if you're using the bigger picture. And regardless of what's going on Brent, and we have been talking about Brent for ages, okay? We have been talking about Brent. Remember what we said about Brent? Okay, about this supply level, the war started here, and the 12-month demand level took control and was rallying strongly. And I said, when price was there, this is the supply level created during the Ukraine war. This was the supply level in control. We're expecting this. Ukraine war started, Brent dropped. What happens? This supply was created during the initial months of Ukraine invasion by attack, war by Mr. Putin. I shouldn't call him Mr. Anyway, by that, well, I'm not gonna say what I think about him and many others. So what happens? Price reaches that supply level and it's dropping like a rock. And we've been talking about this for ages. So on the way up, the Strait of Hormuz was closed, blah, 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 here, blah, 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 blah. Oh, since it's closed, it's going to rally and it's going to reach 150, 170, 180. That's crap. I mean, that's nonsense. Okay? There's a supply level here in control. It's going to drop no matter what they say. So now that there is a truce, price is dropping. It's not dropping because of the truce of the pact or whatever they have signed, which will probably be broken by both sides. Okay? It's dropping because there is a supply level in control. As simple as that. I mean, there is no other reason. So people, normal people, those who are hooked to news and newsletters and what's going on in the daily news and everything, they are subscribed to CNBC, CNN, and Spanish TV and UK TV, financial services. Oh, wow. Oh, okay, yes, of course, it makes sense. Now Brent is dropping, okay, because there is a truce and now the Strait of Hormuz is open, now it's closed, blah, blah, blah. And all that is happening because of that. No, okay? That's the explanation you want to hear, okay? And they want you to hear. The explanation is that the supply level is in control and is dropping. And if you don't believe that, okay, watch my previous video analysis of my webinars where when price was right there at the top, I was saying this is going to drop, this is going to drop, this is going to drop for many weeks. And it's dropping. As simple as that. So what happens now in the smaller time frames? In the smaller time frames, when we go to the daily, we've got a new supply level right there. The one at the top laid out, a new one over there, didn't rally. On the smaller time frames, well, this is a real mess, to be honest. There is a supply level here in the 4-hour. Played out really very well, okay? So, and this applies, as I always say, if you take a look at this one, oops, after very strong sell-off, 1, 2, 3 candlesticks, trading Brent futures in smaller timeframes than the one where we can see the strong movement shouldn't be allowed. You should not trade shorts on Brent crude oil futures until price retraces to that supply level on the 4-hour, okay? And the same applies to what we were talking about before on the euro dollar, okay? So when we have that supply level on the, should be here, sorry, on the weekly time frame, when we see the strength of the moving away down on the euro dollar, a major pair, we have to wait for the pullback. You cannot sell, okay? if you want to buy, obviously you're going to have to use the smaller time frame on the way up, which is counter trend. But okay, up to you. But if you are patient, there is the best exchange rate for the euro versus the dollar index, sorry, versus the US dollar, because the supply level was in control and is dropping. And it has nothing to do with the Fed, with the European central bank interest rates, with GDP, unemployment rates. It's irrelevant. They are useless when we trade supply and demand. I wish very difficult. Wushi Mek. Okay, I'm gonna bite my tongue if I try to pronounce your name, my friend. Sorry. Top professional, great to be here. Wish my Nigerian brothers can learn the truth from you. Please take a look at Microsoft if you could. I can't. Sorry. I took a look at it last week. This is a Forex. Okay. This is a Forex webinar. So probably on Friday, I'm going to do another one this Friday. Okay. But right now, it's only Forex cross pair. And thank you for your message, but I cannot do that. So this is the euro dollar. So the euro dollar is inversely correlated with the dollar index. Okay. So whatever happens on the euro will happen on the dollar index. They are almost pegged, not 100%, because the dollar index is made of the euro dollar, the euro, you also have the US, the Swiss franc, and other pairs, but the major pair is the euro. So whatever the euro does on the way down, the dollar is the dollar index will do it on the way up. So the forecast for the euro dollar was like that, but we've got to the dollar index. Okay, we've got the same thing. Okay. On the euro dollar, we have the supply level. So I'm going to put it side by side. I'm going to unsync the symbol. So on the left side, I'm going to use the euro dollar. So are you going to see what I mean now? I'm going to switch to the weekly time frame, and here we have it. So what do we have on the euro dollar? We have a supply level, very strong sell-off. Price action in this pair is telling us, okay, short bias, but we are not going to be able to sell the euro dollar until the supply level is reached for the reasons I have explained. So what happens on the dollar index? We have a demand level. This is more or less the same thing. It's upside down. Okay. So when price reaches the demand level, the 13th of April, the week of the 13th of April 2026, which is the same week at the same time, okay, the demand level takes control on the dollar index, the supply level takes control on the euro dollar, okay? So what happens? We see that reaction, okay? We see these movements, and on the way up on the dollar index, we're going to see the same thing. A demand level on the daily, another one here that wasn't no pullback, okay? And price is running strongly as expected, okay? A new demand level has been created over here, and probably a new one will be created over there. So all this is happening because the demand level is in control, and also because on the dollar index, as we discussed this many months ago, okay, we have the 3 months demand level in control the same way that the euro dollar has it. So that is why many US dollar Forex cross pairs are rallying strongly, not because there is now no war, quote unquote, or a truce, which is going to be broken whenever Mr. Trump or the other one scratch their head or they feel itchy and okay, I feel like starting another war. So they're going to break it. So, but regardless of what's going on in the world, this demand level on the dollar index is the one in control, and this is why we're expecting that, and it's been doing that for almost a year. So in the smaller time frames, we're going to see very strong reaction on dollar index, on US dollar Forex cross pairs because of that, and not because of anything that is happening in geopolitical tensions or whatever wars we have with other countries. Okay, so this is the dollar index. So then let's take a look at other Forex cross pairs, and we're going to take a look at, let's take a look at US dollar cross pairs. Okay, so we take a look, I don't know, the dollar CAD. We talked about this one many weeks ago. Okay, so we've got a 3-month demand level, which is an imbalance on the quarterly time frame that nobody will look at unless you are a supply and demand trader and know about all this. Okay, so that one is rallying strongly because of that. And if we go to the smaller time frames, we are going to see new demand levels over there, a new one over there on the daily. Okay, there were other imbalances here in the 4-hour. Okay, another one over here, and there was no pullback by a little bit. Okay, so the bigger time frame is playing out, and that is giving us opportunities on the daily, okay, and the 4-hour and the 1-hour. So unfortunately, even on the 1-hour, we've got an imbalance here. Okay, that one was very strong, but the reaction has been so strong that unless you took this one over here, okay, only 1 hour, not even on the 1-hour, there were reactions about the pullbacks. That's what I'm trying to say. Okay, unless you are using other strategies, I mean, which I am not, that is breakout strategies on Forex. I'm not doing that. I'm just patiently waiting for the pullbacks. If the pullback doesn't happen, I'm not going to take the trade. Okay, so we're waiting for price to drop on there or give us new imbalances. It's getting more and more and more aggressive to buy because after a strong rally, we are expecting a pullback. Okay, so that's the thing. So, but the dollar versus the US dollar versus the Canadian dollar is rallying not only because the dollar index, as we could see, okay, has on the left side, let me go here, we have the weekly demand level and everything. So the dollar is getting stronger since the dollar CAD is made of the US dollar versus the Canadian dollar. Then, and the demand, not only the demand level on the weekly is in control on the dollar index, but also on the bigger time frames here on the dollar CAD, we have the 3 months. So on the way up, we're going to see new demand levels on the smaller time frames. This is good for breakout trading on Forex. I'm not doing that, okay? But I'm just saying what is good, okay? And it's up to you to decide what to do with that, okay? I'm not doing any breakout trading. There are enough trades on the imbalance using supply and demand imbalances on Forex, and I can predict, okay, forecast what's going to happen with the dollar index with such a degree of accuracy that I don't need to use breakout trading where the accuracy is much lower, because we are expecting breakout happening and holding. Whereas here, I am not only expecting this, but also because of the trend, I am also assuming the reaction. Here, I can assume this is going to happen. I am expecting, okay? But here, I assume and I expect this to happen, both at the same time, which is more powerful than doing breakout trading without anything supporting the breakout, okay? So it's getting more and more aggressive after a very strong rally. Remember here, 1, 2 large bullish candlesticks, large candlestick. We have on the weekly here 1, 2. So if it continues to rally, it's going to be very, very aggressive to buy in the smaller time frames because the pullback will be needed. Okay, but for now it's okay, unless that doesn't happen. Let's see. Let's wait at the end of the week. So if we take a look at another one, I don't know, one of the majors, not the majors, but the Singapore dollar versus the US dollar. Okay, what do we have here? So we have the same thing, a new demand level over there. Let's go here to the dollar index. So what do we have? This demand level on the dollar versus the Singapore dollar on the weekly time frame took control the 13th, same date. Okay, so and here even the reactions were even stronger than on the dollar index. So what happened in the smaller time frames? In the smaller time frames, we got one level over there on the daily. There was no pullback. There was one here on the daily, which we mentioned in the community, and it's playing out really, really well. I mean, and it hit just the level to the tick. If we go to the website and we go to, because we are sharing this, USD Singapore dollar as they happen. Okay, sometimes I'm missing them, but let me take a look at this. So let me see. Okay, there it is. June 15th. Okay, daily uptrend, demand to control. So we're expecting price to rally. Okay, we can see now it's trying to play out. 3 days later, June 16, 2026, price has rallied very strongly. and it has created a new area demand on the 4-hour, which we were waiting for that to happen. Okay, I need to update it now. Why? Because it didn't pull back to that 4-hour demand level over there. It's creating new demand levels. Okay, in the smaller time frames on the 1-hour, this is a real mess. Okay, this is a demand level there. There's a demand level. This is also 1-hour. So it's like everything is pointing up, and not because, okay, not because we have these smaller time frames rallying, or not because there is some news on the markets regarding the US dollar or Singapore country for some reason. It doesn't really matter. The US dollar is on the left side of this Forex pair. Okay, the dollar index is bullish and rallying, and usually, not always, okay, there is a correlation, Forex correlation on the smaller time frames too, and I will, replicate the demand levels. As you can see, they are very similar, okay, very similar. The euro dollar is the same thing, but upside down, as I show you, and they are highly correlated. Correlation happens on the Forex market, and it works until it stops working, because sometimes the correlation just stops working. And I have recorded some videos on YouTube that explains that. Okay, so hi, good afternoon. Please check the Aussie dollar if you have time. It is in weekly demand. Okay, I will take a look. I will take a look at it right now. So, but before taking a look at it, let's do like a very simple analysis. Okay, so we've got the Aussie dollar. Okay, the Australian dollar versus the US dollar. Okay, so this is what we have. So what is the dollar doing? It's rallying, okay, because we have the weekly demand level, 3-month demand level in control. So on this pair, the dollar should be pushing price lower, because the dollar is getting stronger since it is on the right side of the equation of the ticker Forex pair. So in the smaller time frames, we should see price dropping strongly, because the US dollar is getting very, very strong. This is a very basic correlation analysis between the Australian dollar Forex cross pair and the dollar index. So now if we switch to the US dollar, so if the US dollar is getting stronger, buying on the Aussie dollar is not a good idea. Okay, I hope you're following what I'm saying. If you follow, we have demand levels here, okay, which is fine, okay, but the weekly time frame will not be in an uptrend anymore this week, and we can see that the level is just going lower and lower. It's penetrating the level lower, and we analyze, like I said before, the US dollar is getting very strong, so it is pushing the Australian dollar down. Okay, if we take a look at the monthly time frame, so we've got the demand level down there, and this price action on the monthly time frame is not good. Okay, so we should expect price to drop much farther to this area. So assuming that this is going to happen with the monthly time frame that way is not a good idea. So although we have the weekly demand level in control, we have the dollar, US dollar, pushing price lower, because it's getting very strong, new weekly lows. So if we go to the smaller time frames, we can see the creation of new supply levels on the 4-hour. We've got another one here. Oops, what happened? On the 4-hour, right there, quite strong. Okay, so there is no signs. There is no sign of buyers here. Okay, what do we have here? The latest updates: New Zealand dollar, blah blah blah. Australian dollar hits. I don't care about that. Australian extends decline to 11-week low. That's useless. That information, you can pull it from anywhere. You just have to look at the charts. This information is useless. It doesn't give you any tips. Okay, so what happens? So if we go to the daily time frame, the daily has this demand level over there, which is also in control. But like I said, we are expecting price to drop lower. So, and let me see here, the weekly demand level, the monthly demand level, sorry, is much lower around there, and that's what we are waiting. So If you want to go long here, you're going to have to wait for something, okay? And the 4 hour is just printing new lows, new lows. It is losing steam. As you can see here, price action analysis for this pair, okay? If you use price action strategies to trade on Forex, we have 1, 2, 3 large, you see, large candlestick body, even larger, okay? Even larger body, a smaller body, very small body, okay? The US market is about to open, New York market. So this will probably give us more liquidity, and let's see if price continues to drop or give us like a strong rally, and then we can have new demand levels there. But on the bigger picture, with the dollar index getting stronger, it's pushing the Aussie dropping lower to lower prices. So buying, what I'm trying to say is that you cannot set and forget this type of trade. Okay, you have to wait for something. You just don't take it blindly. You can take blindly other setups like the euro dollar that we saw before, the dollar index because of the strength and the location and the momentum and everything. And even here on the way up, but on the Aussie dollar, I mean, I wouldn't trade it right now because the dollar index is very bullish. And on the Aussie dollar, okay, the dollar is getting stronger and it's going to push it's pushing already the Australian dollar to lower rounds. So that's the price action and supply and demand analysis on the Aussie dollar. I hope it makes sense. Okay, Ash. So let's see what happens. But it is not the clearest setup, and there are much better ones over there. If we take a look, if you want me to analyze any other Forex cross pair, just let me know. Okay. I'm going to continue, okay, but I'm going to accept any suggestion, okay? So the dollar versus the Swedish krona. We already know that the dollar is getting very strong, okay? It's being strong for weeks. We've got now the demand level in control from 3 months ago. We've got new highs on the weekly. We go to the smaller time frames. What happens here? So we have a brand new level of demand right there, okay? And a new one is being created there. On the 4 hour, we've got a new demand level right there. We've got another one over there, and that one is the daily. So if you don't take the level on the weekly, and on the 4 hour, it didn't pull back. On the daily, it didn't pull back, okay? It did pull back probably to 1 hour time frames, so demand levels somewhere. This is, I need to analyze it. This is demand played out. Look at the strength of this demand on the 1 hour, okay? So look at this. So why the dollar versus the Swedish krona Forex cross pair, the forecast, probably everybody was thinking, oh, but it's going to drop. It was dropping. All the moving averages were crossed down. The Bollinger Bands were like this. The MACD was crossed down, blah, 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 all the indicators. And then suddenly we get these, look at this impulse here. 2 very large candlesticks. Those are the ones we want. These are the ones we want. But unfortunately, the bullish strength of these dollar cross pair was so strong that it just didn't allow us to. So this is what happened during the Asian market, where the liquidity goes very weak, very thin, and the New York market, sorry, the London market opens here, and then it just rallies strongly. Here, this is like 16, 17, 18. During the New York market, price rallies strongly. Liquidity is lost because of the Asian market. These are 2 pairs that are not heavily traded in the Asian market. If we had the Aussie Australian dollar cross pair or the Japanese yen or New Zealand dollar, we would have more liquidity. But in the Asian market, this has no liquidity at all, and the spreads go very wide. So then the London market opens and gives us more liquidity, but the pullback never happened. Okay, so the bigger time frames, as I'm saying in this thumbnail that I created, the real reason, okay, why Forex market move is very simple. It's because supply and demand exists, control price. And when that happens, then everything changes. It doesn't matter if Elon said something or Mr. Trump is doing some crazy things, if he's starting a war or ending a war, but then in the back of his mind he's saying, okay, but I want to do something else. Let's attack Spain, okay? Because Spain said that the president said he should be hanged. But anyway, our president, he said that he's not giving like the percentage and they wanted for the NATO and things like that. So we are not supporting the US. So now this Mr. Trump was crazy about Spain. Oh, Spain's not good anymore. Okay. So I don't know. Maybe he will do something to fuck us up. Who knows? Because this guy's crazy. He shouldn't be governing any country. He should be somewhere else. But well, this is the time we're living. So this is what's going on. Okay. And now probably I'm going to get a couple of emails from Trump followers telling me that I shouldn't say anything about him, which is crazy. I don't know. People should have like a more private, personal life other than following somebody's comments. I'm free to say whatever I think. So the US dollar is getting very, very, very strong. Okay. So it is not a good idea to buy cross pairs with the dollar on it. That's why it's very simple correlation. The Aussie dollar is at the weekly demand level, okay? But there, as we said before, but the dollar is getting very strong almost across all the cross pairs. So it doesn't make sense. You know what I mean? Buying right now doesn't make sense. It's selling. Unless we start getting some nice pullbacks on the dollar index, that could happen. And then if the devil here is still in control, we might give us some options. But right now, no way, okay? No way. So if we take a look at other cross pairs on dollar, let's use the Swiss franc versus the dollar index, which is one of the majors too, okay? So what happens here? Wow, again, weekly demand level to control. On the dollar index happening the 13th of April, okay? That didn't pull back. Then 1 week later, and then in May, that's when the demand level takes control. It took 3 weeks more for this weekly demand level to take control. Remember what we had before? Let me switch here to the dollar index. Okay, look at the crosshair, okay? It happened right there, the 13th of April, that week, and here it just didn't happen. It happened 3 weeks later. And when it happened, when the dollar index was rallying after the third week, that is when the dollar versus the Swiss franc takes control and it started rallying very strongly, okay? And they are highly correlated, but the correlation doesn't necessarily need to happen on both pairs at the same time, okay? It's not, otherwise all the charts, the dollar index, the Swiss franc, the euro dollar, the Aussie dollar, the Kiwi dollar, all of these forex cross pair would look exactly the same thing. So what is the point, okay, of trading different forex cross pairs? So there are many variables that influence the price action on forex cross pair news, obviously, liquidity, big boys doing big currency exchanges, so many things, okay? And so what happens in the smaller time frame on the on this guy, on the Swiss franc? This is like a new demand level over there, and we've got another demand level over there. So price rallies, new demand level, reach that level, and then rallies, and now we get even a stronger level. So let's analyze price action, okay? Very strong rally, okay? 2 large USDs loses steam, and a week later, the demand level, okay, last week, the 17th of June 2026, this forex pair was reached. The demand level was reached. Then the strong reaction, and this reaction, I'm sorry, is even stronger. Why? Because if we analyze price action, it took the dollar versus Swiss franc pair to rally like 2 candlesticks, okay? So if we draw a box here, okay, from here to where it starts and where it ends, where it pauses, and I duplicate this rectangle and I move it here, look at this. The previous movement would have ended there, okay? to be the same strength. So what happened? We even have another even larger candlestick body, and that then we have a smaller candlestick body, even smaller. And now, for now, okay, it's the New York market just opened, so we don't know what's going to happen for now. But as you can see, large candlestick, smaller, even smaller, even smaller. So this could tell us that this could probably happen. Okay, the same way this happened here. You can see how price action loses steam. Okay, and it drops and then it rallies. It rallies. You can see the width of these candlesticks. You don't need to follow any news or fundamental analysis on Forex. Okay, you can predict and forecast the analysis of the dollar versus the Swiss franc pair using price action alone. You can use price action strategies. You can use indicators you want. You can use supply and demand, because that is where the demand level, next demand level, is located. So after a strong rally with signs of the dollar versus Swiss franc pair dropping, buying is not a good idea, my friends. Buying is the way to go, but not now. We need a pullback. Understand what I'm saying? Hopefully, okay? So, like I said, if you want me to analyze other Forex cross pair, just let me know. So what happens now? Let's go to, this is the dollar cross pair. So, but if we go to the Nikkei futures, we've got this. Yeah, let me clean all this. So when we take a look at the daily time frame on Nikkei futures, this is what we have. We have a very strong red candle. Okay, it's like this is like, no way should I buy, isn't it? Price is very strong rally. Okay, new demand level there, no pullback happened. New demand level here, no pullback happened. Demand level over there. This one here was mentioned in a live webinar that I held a few weeks ago. Okay, when price was there, I was saying price is going to drop there and it's going to play out, and it did play out. It's on one of the webinars. Okay, I don't remember which one, but the one you should just look for the date, middle of May, and it's on my YouTube channel, and it played out. So, but this is a little bit alarming on the daily right now, because if I zoom out, okay, even more, I mean, could even more, but let's stop here. Okay, August 2025. If we analyze all these candlesticks on the on the Nikkei index futures, this candle over there, the one that is being printed today, is the largest ERC bearish negative candlestick that has happened in a year. So this here is quite relevant. And if you keep zooming out, it's not only a year, 2 years, or even more. So this is what this is significant, okay? Just by looking at the daily time frame. So it tells us that if the daily is doing like this, we shouldn't be buying, okay? At least on the daily. If we go to the bigger time frames, okay, this is what we have. We've got new weekly demand levels, no, over there, created right there. Okay, so the previous demand levels played out very well. So now in 2 days, so let's analyze time here. Okay, this is the weekly time frame, another time frame that most future traders won't even look at. Okay, because it's just too big and too much risk, blah blah blah. Okay, but we need to analyze it to see the bigger picture, to see what's going on. Okay, so if we add indicators like, I don't know, let's add the Bollinger Bands. Maybe you are using the Bollinger Bands, okay? Well, the Bollinger Bands, the upper band has been pierced, okay? So it's like, we could expect that depending on the configuration of the Bollinger Bands. This is the default configuration, okay? Let's use MACD. Okay, MACD crossed up, overextended. We are expecting price to drop a little bit the same way that this happened over here if you're using it, okay? So after a very strong rally, not a good idea. But regardless of what the indicators are saying, you can see that the 20 EMA is holding on the Bollinger Bands. That could be another strategy. I don't use that. I'm only using supply and demand. So what happens is that happens on the daily. So the daily cannot be our time frame to make a decision, because as you can see, I'm going to remove this one. Remove. I'm going to leave the Bollinger Bands for now. Well, no, let me remove it. Okay, so the daily cannot be our entry time frame. So what happens? It should be bigger. On the smaller time frame, we're going to have supply level at the top, meaning the strongest supply in ages. Okay, which will probably play out when price rallies. Okay, if it doesn't take too long to rally, because if it takes too long, the bigger time frames might resume its uptrend, and then we are lost. Okay, so look at the price action here on the left. It's very, very bad. And when we take a look at the 4-hour top price action here, it's even worse. We don't have strong impulses like this one over here. Okay, we just have like small impulses, price rallies and drops, no large movements. The largest movements are like here, and now to the bear side, bearish. Okay, so buying now, obviously, no way. So we need bigger picture. The bigger picture is telling us that we are expecting the Nikkei index futures, okay, to do that. So this candlestick here on the left side is 1 week old, because the weekly time frame, okay, this candlestick closed at the end of Friday, last Friday, and now 1 day ago, I mean yesterday, Monday, 22nd of June, 2026, the candle opened right there. It rallied a little bit during this session, and then today it sell off very strongly. So what happens? That this weekly candlestick here, in only 1 day and a half, its body size is almost as wide as the candlestick on the left. So this is price action analysis, very basic analysis. Okay, I have created a course on price action, okay, that I mentioned in the previous webinar. So here, that explains so many things. This one here, price action. This is the main one, the intraday, the options for option traders. This one is super important to understand when stock or a forex pair is going to be dumped or pumped. Okay, and this price action course explains all this in more detail. So here, what happens here is that this candlestick here is way stronger than the one on the left, because this movement happened in 1 day and a half, where the movement from last week candlestick on Nikkei futures was almost as wide. So we are expecting price to keep on dropping. So now comes another thing. Since the Nikkei futures is what tells us traders, okay, what the Japanese economy is doing in Japan. So if Nikkei is really, really good, then, I mean, Japanese companies should be doing well, quote unquote, okay? Not all of them. So it's good for the economy because they are mostly exporters. So a weak Japanese yen means a Nikkei, a strong Nikkei index means a weak Japanese yen, which is great for them to export all these IT things they are doing, cars, Toyota, etc., and Sony, and so many other companies, okay? So it's good. But now, after a very strong rally, we're waiting for price to drop down there. If we take a look at the monthly time frame, we have a demand level over there that played out. We have another one over there, some pullback, and here we have another one. So the next setups for Nikkei index futures are the weekly time frame that we just drew before, and then this one. Can I select this? There, okay. The weekly time frame right there. And if that one fails, we're gonna have to look at price action. Then this one. So this one played out really well, and this one is even stronger. So two long-term setups here. You're welcome, my friend. You're late, but next time you're late, I'm going to ban you. You won't be able to join. Okay? You will be punished. I'm obviously joking, but okay, good. So this is a long-term Nikkei futures analysis. We're not talking here about intraday scalping, everything. If you are a scalper, obviously on the way down, once you see that strong sell-off, you can use breakout strategies on the way down, everything. But obviously, I'm not going to do that, because why should I do that if I can see that the weekly is still in an uptrend, the month is in an uptrend, etc.? There's no point for me to take action to short. Okay, I'm just going to wait a little bit more. There are many other setups on the dollar cross pairs, so there are plenty of trades. Okay, so since the Nikkei is dropping now, okay, we're going to check a few of them. Okay, we still have 15 minutes, but like I said, if you want me to analyze another Forex cross pair, just let me know. Okay, I'm doing now the correlation with the Nikkei index and the Japanese yen. Originally, this webinar was about the US dollar and the Japanese yen. So if we go to the euro versus the Japanese yen, one of the major cross pairs, this is what we have. We still have the weekly demand level in control that we mentioned for many, many, many weeks. Okay. So what happens here? It's been tested already. And now we even have a new weekly low on the weekly. So it's tricky to trade right now. We need something else. On the daily, you can see that was this daily supply level at the top that wasn't reached. So that is, the strongest one. So what happens? It tries to reach it and it drops. The demand level is hit and demand is consumed even more. So price rallies. No demand is created. Nothing. Very bad price action. Then new high, we think, okay, price is going to rally over there, but just something happened, and we can see another large candlestick. And now not only do we have large bearish candlesticks, but we also have new daily lows. So nothing here tells us that we should be buying the euro yen right now. With the Nikkei index getting weaker, it is helping the Japanese yen to get stronger in that Forex correlation that exists between the Nikkei in the futures, Nikkei index futures, and the euro and the Japanese yen cross pairs. So let me read here some message. Barum, hello sir, will you always enter on weekly time frame? Nope. As these times the subs are very wide, can you please explain the entry in lower time frame? Well, that is explained in the courses. I'm not going to go to the 50-minute, 5-minute, and don't do that. So I'm not going to explain here what should be doing. Right now, no buying. Okay, if you're going to buy it in the smaller time frames, I'm not going to give you any tip on that, because it's the lower you got. Now it's new lows, new lows, new lows. It's not a good idea. If you take a look at the 50-minute time frames, there is nothing that is telling us that this is going to happen. So we thought this could happen on the 50-minute when the demand level was in control, and then price dropped. We thought this could happen, and it dropped. We thought this could happen, and it could drop again. Okay, so it doesn't make sense. Okay, so which time frames do I use for my entries? Daily, 4 hour, weekly, monthly, 3 months, depending on which asset I'm trading. With stocks, I can use bigger time frames. I'm using options. Okay, and there's a course, like I said, on options, how to use them with supply and demand exclusively. Okay, this is not the typical options course. And but right now there's no reason to buy. Okay, you could say, I'm gonna buy, I'm gonna set the stop loss there. Well, this level is like low, new low, now the new low. We need some strength here. And when it happens, it will be very obvious. It's gonna happen. If it happens, it's gonna be very obvious. But if you say, okay, since the weekly demand level is in control, then I'm gonna go, like you said, I'm gonna use like 1 hour or 50-minute time frames. No, it doesn't work like that, my friend. Because what you are doing there, Varum, is you want to use a very little tiny time frame to confirm buying at a demand level that has already been tested several times, that is being under attack, and new lows are being printed. So the 15-minute time frame is, you are just chasing a trade. You are not setting up a high probability type of trade. You just want a trade. Okay? I hope you understand what I'm trying to say. This is not a set and forget type of trade. I mean, the community I manage is called set and forget for a reason. You set your trade and forget about it. This is not a trade that you can set and forget. Why? Because the level has been tested several times, and there's new lows on the weekly, new lows on the weekly, new lows on the daily, in the 4 hours. So why should I buy? The level is already used. It's like, I've been talking many webinars, I mean, comparisons between men and women, okay? And they're in the past, many centuries ago, and probably still now in some countries, in some, so men with power wanted only virgin women, okay? They wanted to have sex or intercourse and have children with women that had not had any sexual relationships. So now imagine the Euro-Yen demand level is a woman, and we are like 2,000 years ago, where you have the power to decide that. I mean, our customs say, you can only marry a woman who is virgin. So is this level virgin? No, my friend, it has already been. I mean, this woman has been with many men. I don't want that woman. Makes sense what I'm trying to say? I mean, I know this is very harsh when I say like that. I'm not a misogynist. I'm not against men or women or anything. I'm just talking about in general terms, so you can understand what I'm saying, okay? So this level has been tested a few times, and new lows are being printed. So the woman is no longer fresh, let's say, okay? It's not a good idea. So let's take a look at the British pound versus the Japanese yen. Remember, the yen is highly correlated with the Nikkei index, and the Nikkei index is dropping. So something should be happening with the Japanese yen versus the British pound, okay? So the demand level was tested. You can see signs of bullishness there. Then it played out really well, okay? I like you like that, Mike. I mean, I am always saying all these, using these analogies with men and women in the past and being gay and ladyboy and all that with respect, okay? I don't want anybody to now accuse me of sexual harassment to any sex or gender, okay? This is just for educational purposes. And when I talk to men about price action and trading, and I use those analogies, most of them all love them. So what happens here? So the weekly demand level has been tested several times, and now you can see on the pound dollar, that level, you see, remember that level on the Euro-Yen? Well, let me do this. I'm going to switch here to the Euro-Yen so you don't have to think about it. Look, this is the strongest supply level in ages, okay? In the Euro-Yen, the demand level on the weekly took control, it rallied, and it hit our target. So it just dropped, which is what we were expecting to happen on the Euro-Yen. It just didn't happen, okay? It fell short of retracing to that level, and then it dropped strongly. But on the Japanese yen versus the British pound Forex pair, the supply level was reached, the strongest ERC or standing range candle in ages, since this one back in February, and it took control and it dropped, okay? So no, it is not, has been destroyed. It is not worth it anymore, okay? Yen should be rallying. Well, the yen rallying means that it should be dropping, okay? Remember, the yen is here. If we use, I guess this is allowed, the yen, Japanese yen versus the British pound, then we have the same picture, okay? And upside down. And the weekly should be at the top. But we are using, this is what most people use, the British pound, the European currency versus the Asian currency, okay? But so this is so we need some signs of some new levels. We even have a new low here. So we need something. It will be very obvious when that happens. So this is the demand level that played out really well. Okay. So as you can see here, if we go to the website, we can take a look at what was said in the last few days. Let me go back in time. Okay, there. Last Friday, Japanese yen, demand level takes control, brand new level of demand at 212. The demand level takes control. Yesterday plays out, and then there's a new update, price rallying very near to the 3-month average supply. We don't buy right now, okay? It just played out. We don't have any imbalance, any new imbalance. So that is what we do, okay, as a community. So from here, we could have price rallying again, but there is no sign, so we need new demand levels in something like this. It's not there anymore. If we take a look at others like the Swiss franc versus the Japanese yen, which is also highly correlated. The Swiss franc is on the left side. It's like having the euro, okay? It's an European currency versus the Japanese yen. If we go to the daily, we've got this daily demand level over there that played out really well, very similar to the daily demand level we have on the euro yen, the weekly demand level we had on other cross pairs. But what do we have here? Low, new low, new low, new low, new low. You see, a daily. In the last 4 days, since the 18th of June, 2026, the Swiss franc versus the Japanese yen cross pair has been printing new low, new low, new low, new low. The level has been tested already. Remember, this is not a virgin level anymore. This virgin level is being under attack, okay? You want fresh, okay? Remember the analogies I said before. You want something fresh. This was a great, outstanding level, okay? Very strong rally. And the same thing, a very strong rally. We want to pull back. It happened, and we were talking about this one, the euro yen, the pound yen, the dollar yen, etc. As this happened, okay, and this rally. So now price dropped, new low, so we need something serious here, okay? We need something strong that tells us that there are, in this tested non-virgin level, there is new interest, okay? So this is the Swiss franc. If we go to the dollar yen, there is a weekly demand level we mentioned many weeks ago that played out really well, okay? The supply level was eliminated, okay? But why was that one eliminated and the one on the euro yen and the pound yen wasn't eliminated? Well, because it's very simple. Let's do some analysis here, some correlation analysis. Let's go here to the pound versus the Japanese yen. Okay. So what do we have here? First of all, on the left side, we have the Japanese, the British pound, okay? So the British pound is dropping like a rock, okay? It's we've been talking about this one for a long time, okay? The supply level on the daily played out. There's a new one over here. We're waiting for the pullback to happen, okay? And why is it dropping? Well, because we have the 3-month average supply in control, very similar to the one on the euro dollar and the dollar index and many other cross pairs. So the pound is weak, okay? So a weak pound with a strong supply level over there has higher probability of playing out. Same with the euro, with the euro is dropping very strongly. But why did the dollar versus the Japanese yen eliminated that area of supply? Because the US dollar, on the other hand, was very strong with the weekly and 3-month demand levels in control. So that is helping the dollar to get more strength and attack this level and eliminate it. Whereas the pound, British pound pairs and the euro dollar major pair are negative, are bearish long term. So any new supply level can affect them more strongly than it does to the dollar index, with dollar rallying strongly. Okay, so that's the reason, one of the explanations you can find. Okay, Obviously, if price reaches that area of supply, I'm not going to sell. Why? Because when we switch to the weekly time frame, okay, I mentioned this one long time ago. This demand level, look at that. Very strong rally. I mean, it loses steam over there for 1 month and a half. It drops to level and magically, okay, trade tests the proximal line, kisses the level, and departs. So why am I going to trade the daily supply level over there when the weekly was uptrending and the demand level was in control? It doesn't make sense. And this is a very strong level, okay? Whereas the demand level on the weekly here is not that strong, as strong as this one on the dollar at the end. On the dollar index was strong, so that helps, together with demand level in control, remove that obstacle on the daily. But on the pound yen, since the pound is not that strong because we have a bearish, long-term bearish bias on the pound, then we expect that level to hold, whereas this one, we expect the daily to be eliminated. Okay, so Ahmed, hello, is it necessary to do top-down analysis from the 6 month? Nope. Till I reach my time frame, 4 hour? Nope. Or is it enough to have the top-down analysis on the weekly, daily? It's enough, but the thing is that, let me give you an example. In this case, we have the weekly in the downtrend, blah, 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 so it's okay, okay? But if you are unaware of this, and you are unaware of this supply level, and if you don't do the 3 months, you are in trouble because you won't know why price is dropping. So it's good to take a look at the bigger time frames. Why? And let me give you another example. Let me zoom out to have a blank screen here. So imagine this, and I'm going to analyze the EURCAD, that will be the last one. So imagine you are driving a car, okay? This is like the road, the right side, okay? And you are vehicle A, there. And here there is vehicle B. What is the maneuver, the first thing you're gonna do when if you want to overtake vehicle number B? Well, if we had like more interaction here, I would ask for your answers, but since there is a delay here on your answers on YouTube, it doesn't make sense. So I'm gonna go and say it myself. So when you're driving a vehicle, the first thing you're gonna see or do is to look at the left mirror. Why do you look at the left mirror here? Because you want to know if there is a vehicle C trying to overtake you in your overtake maneuver. If you don't look at the left mirror and there is a huge car, okay, or even a motorbike smaller than you, your vehicle, then you're going to crash, have an accident. You could end up at the hospital or in a coffin underneath, I mean, with a ton of land on top of you, okay, dead in cemetery. So what do? You take a look. You look at the left mirror. You don't need to look at the right mirror because you are on the lane on the right lane. So I don't think anybody is going to be so stupid to go like this. But there are some motorbike drivers, myself included, sometimes. So, but I am very good at doing that. So this is what you're expected to do. So the same thing. So you're going to trade the daily time frame, okay? Okay, I'm going to buy. Okay, I'm going to buy on the daily. Or I'm going to buy on the 4 hour. And you're doing short-term analysis. What happens? Then you look left and you realize there is a monthly or a weekly supply level that just took control and everything's in a downtrend. What do? You don't overtake. You are expecting that level to remove everything. If you try to overtake vehicle D, you are going to end up at the hospital or at the cemetery. So I answering to the question, do you have to look at the bigger time frames? No, you don't have to. Should you? Yes. Why? To avoid that mistake, ending up in the cemetery, blowing up your account. You need to know what the bigger picture is, okay? So, but there are many rules for that, so to save a lot of time. So the EURCAD. Let's see what's going on with the EURCAD. Well, the EURCAD still has this supply level in control that we mentioned many weeks ago, which is very similar to the one we have on the euro dollar. EURCAD here, let me go to the Euro USD on the weekly time frame. These are daily imbalances. I'm going to redraw this. So this level here on the euro dollar was reached more or less at the same time that the EURCAD was reached. Okay, price dropped. Okay, and at this time of here on the euro dollar, it dropped over there. On the EURCAD, dropped lower. Now it prints a new high. So we have like the level printing new high. It's not a good idea to sell, but in the smaller time frames, let's take a look. Well, this is a real mess, to be honest. A new supply level is being created here. For now, it's weak. So it is a little bit, it has nothing to do with the euro dollar. Why? Because the euro dollar, although we still have a downtrend, okay, very similar level, it was reached more or less the same time too, but the euro dollar kept on dropping because the dollar index was very strong. And the EURCAD wasn't, because the Canadian dollar is getting very weak. So it's helping price to rally. The dollar CAD, as we saw before, the US dollar, was the Canadian dollar is rallying very strongly. So it means that the Canadian dollar is very weak and the dollar CAD is a major one. So having new highs on the weekly doesn't look good for selling. Okay, so we need something else here. This level has been tested once, twice, 3 times, 4 times, okay? Whereas the dollar versus the euro has been tested a couple of times. So if I had to choose one, I would choose the euro dollar and new levels of supply instead of the EURCAD. Because, I mean, it's very tricky. When you take a look at the monthly time frame, we expect the price to drop, and then we have this pink candle. Going to the smaller time frames, I mean, even this strong rally has been eliminated. So we need, now it's very weak. Yeah, new supply level there on the 1 hour for short-term trading. Very strong, but it didn't pull back. And right now, this is very weak. So yeah, I mean, it's obviously short bias. So if this week ends like this, it's going to be great. There is still room for price to drop here. And if these lows are removed, then the EURCAD is going to drop much lower. But right now, it's not a good idea to sell unless we have new supply levels and there is nothing on the daily. The daily is in an uptrend. I mean, there was a very old level over there that was eliminated, a new high print, and then fake out and drops. We need something else. We need all this out of the way and new supply levels. Yeah. Yeah, the EURCAD, yes, I said, is not good for selling. So we need something that shows us or proves there are sellers interested right now, and there's nothing that proves that it can be proved here. I mean, you were thinking of buying demand on the EURCAD, but I think I'd reconsider. I mean, up to you, my friend. But buying with supply in control? I mean, are you really serious that you want to buy with this in control? I mean, it doesn't make sense. This is why many traders fail. I mean, you already know that saying that selling is not a good idea right now because of the weekly highs, we need something else, doesn't give us the right and the higher probability of buying. I mean, we still have supply in control on the bigger time frame. So you are telling me that you want to buy expecting what, this? So that is insane. You know what I mean? That is a very bad decision. You can do whatever you want. I'm just saying, I'm just presenting to you and all the attendees here the logic. You've got an obstacle here, very strong obstacle. We still have the weekly in a downtrend, and you're telling me that you want to buy. That doesn't make sense. Okay. Can the buy setup that you are considering, probably around there, play out? Absolutely, yes. but it is not allowed as supply and demand traders, because the bigger time frame supply level is in control, okay? And we still have a weekly downtrend. So buying, no way. But since I said, okay, it's not good for selling, then you say, okay, I'm gonna buy. It doesn't make sense. It doesn't make sense. Okay, I don't like that. I don't like that woman. Okay, but I can go with a man. Okay, since I don't have any woman to go with, I'm gonna go with a man. No, my friend, I am not gay. I am a male. Okay, I'm not interested in doing things against my gender. So same thing. The level is not bridging, okay, and it's being used up by many other men, quote unquote. I'm not interested in this one. But that doesn't mean that since it is not good for selling right now, I have to buy, or I can buy. I cannot give myself permission to buy when there is a large picture downtrend with supply and control. And the last time this level was hit, it dropped like this. Now there's a new high, but that doesn't give us, that doesn't tell us that it's going to keep on do this, and then from there going higher. But like I said, up to you if you want to buy on the daily. I would never do that because it is still in a downtrend. And this is everything I think for today. We've been analyzing the reasons why why the forex market move. We have analyzed the euro dollar, the pound dollar, some yen cross pairs, some dollar index, dollar cross pairs, and everything. And we can see that the real reasons is supply and demand and that price action together both create the market's movements. Okay, the rest is just irrelevant. Can add another layer of complexity and also another strategy, other ways of trading, but it's supply and demand that underlies every move. Okay, supply and demand is what underlies every single movement, regardless of what's going on in the markets. So, like I said, buying here, expecting this, it doesn't make sense. It's crazy. Okay. So no wonder then we have, I blew up my account. Oh, if you do things like that, it's normal. Okay. So thank you very much and see you in the next webinar. Maybe I will do another one on this Friday if I have time. Otherwise, next week. Have a great, great day. And whatever you need, just leave me a message or contact me on my channel or my email. Have a great day.